How about now? Can anybody hear me? Is that better audio?
There you are. Sean, can you hear me?
I can.
There we go.
Okay. We're going to go ahead and get started, everybody. Do me a favor. Chat in the chat box if you can hear me, if the audio is better. Got it. Cool. How about the rest of you in the room? Awesome. Perfect. Okay, what I'm going to do is I'm going to go ahead and share my screen real quick, and we're going to start with a real quick market update on what's going on with Greece. I don't know how many of you have been keeping abreast of the global economic meltdown that's happening right now, but I wanted to introduce Tim Adkins. Tim and I have been working together for about 5 years now, and he's one of those people that just has incredible insight as to what's going on around the world and how that impacts your own personal economy. And so with that in mind, I'm going to start by sharing my screen, but Tim's going to go through some economic updates for us real quick. Tim, what's going on with Greece, and why does that matter to us?
Yeah, it's pretty fascinating to sit back and watch, and everybody loves a train wreck, as they say. To watch it, you can't help but stare. But unfortunately, it applies to us because we're so connected as a global economy now. So what's happening in Greece is very similar to what happened in Cyprus a couple years ago, and so currently there's what they call capital controls in place where ordinary citizens can't get to their accounts at the Greek banks. And the reason that capital controls are in place is because, frankly, the Greek government is broke, and so knowing that, they expected and anticipated there would be a run on the banks, and so they did a bank holiday on Friday afternoon and said, "We'll let you know when we reopen the banks. In the meantime, you can go to the ATM and get out a very small amount per day." And so that's been the situation for over a week now. On Sunday, Greek citizens voted no to the European Union's austerity, measures. Basically, think of this as a giant credit card, and they went over their limit and are not making their minimum payments. And the creditor, the credit card company, which is the rest of Europe, and us, frankly, our government owns some Greek debt, are all saying you need to pay your minimum payments. And since you defaulted, which happened about a week ago, now we need to tighten things down a little bit and make sure that you can manage your budget and continue to stay current. And Greece basically said, no thanks, we're not interested. So where will they turn for money? Well, most likely they'll turn to their citizens, which is what happened in Cyprus a couple of years ago. And they'll do something called a bail-in, which is a fancy way of saying we're going to create a new tax that takes from your account as a depositor and use those funds to shore up the government's finances. So that's just one of several very fascinating developments currently in the global economy. The other being yesterday there was a 4-hour delay where kind of unprecedented shutdown of the New York Stock Exchange. Simultaneously, United Airlines had a glitch in their system, their computer system, which shut down all United flights for some time. And China's basically bubble is in the middle of bursting as their stock market is unwinding, and their government is threatening to prosecute short sellers that are adverse to the best interests of China. So it's really an interesting time the last couple of weeks. And with that backdrop, our focus here is how do we insulate from all that and make sure that what we have in place will do well. So yeah, it's an interesting time, Sean.
Yeah, it's fascinating to me. You mentioned that people are limited on how much they can withdraw from their bank accounts each day, and the number is 60 euros a day. So think about this. How would you survive as a family on 60 euros a day, which is equivalent to probably close to what's the euro US dollar peg?
It's probably $70 right now, $70 a day.
Yeah, I mean, it's just, if you think about just filling up your car with gas cost about $50. That leaves you $20 to spend the rest of the day before you have access to any more. And so that begs the question that, is that going to happen here in the United States? And we believe it's inevitable. We believe that Greece is the first domino to fall in this global collapse. And what's interesting is what Tim pointed out is that the Chinese government is scared as well, because their economy hangs on a thread just like the European Union's does. And if you think about it, you've got Asian countries like China and Japan who are trying to increase their exports, and Europe has to compete against them for exports. And so you've got these two two areas of the world that are actively trying to print as much money as they can to devalue their currency so that they can increase their exports. And so if you've got European Union that's doubled the printing of the euro to devalue their currency to make things cheaper to buy in Europe and export out of Europe, and you have China and Japan and all the Asian countries doing the same thing. Now we're seeing signs of Russia doing the same thing and South America countries doing the same thing. You've got all these central banks around the world that are in this kind of coordinated effort to devalue their currency. What does that mean for the US dollar? Well, what that looks like is that the US dollar appears stronger compared to those other currencies.
Yeah, one thing, if I can interject that. So one thing that with currencies, all these currencies are based on confidence underlying, and so it's all relative. So previously China was really looking strong and seemed to be a threat to unseat the US dollar as the world's primary reserve currency. But now with this recent development, it makes the US dollar look very strong, even in spite of the massive amounts of debt and the deficit we're running on. The US dollar still looks strong. And so there are many implications of that, but if nothing else, it bought us more time to operate under the U.S. dollar as the world's reserve currency. So it strengthens us in that regard, and that, I think it's important to interject something about our personal economies. We work in and live in U.S. dollars, so we definitely want our currency to be solid and strong, and we always advocate storing your capital in U.S. dollars that's readily available and usable and liquid, so that when you see opportunities or if you have emergencies, you're ready to go, you're ready to make a move. And those that were in that position in 2008 and 9 really made out well. Most people, unfortunately, are not liquid, so we have to always set up our personal economy with liquidity under our control.
Yep. And I just pulled up the U.S. debt clock. I don't know if y'all can see this or not, but type in the chat box if you can. And what's fascinating to me is down here you can see U.S. total debt, the $61 trillion, okay? So you have federal debt, national debt, which is government debt, which is their bail-ins and their bailouts back in 2008. Do you remember when they bailed out the banks and the number was $4 trillion and it was an ungodly sum of money? Well, look what that's grown to, $18 trillion in money that has been given over to the banking system and other institutions to kind of help them out and bail them out. Well, if you include student loan debt, housing debt, car loan debt, credit card debt, all forms of debt or credit derivatives is what they call it, we're up to $61 trillion in debt. So, although the U.S. dollar appears to be the strongest of all currencies,
you might say it's the least bad currency.
Exactly. It's like, does that mean the problem's gone away here in America? No, it hasn't. And so that's what we're faced with, and that's the scary thing about what's happening globally. And by looking at Greece and by looking at China and looking at these capital control measures that Tim just talked about, those capital control measures are all instituted at the bank level and the Federal Reserve level. Okay, those are policymakers that are saying, hey, you know what? We're going to change the rules of the game, and from now on, U.S. citizens can only withdraw $100 a day from their savings. If that happens here in America, how will you survive? What is your game plan, or what is your solution to that problem? And that's really where we come into play, and that's why we've created this platform, is to educate people on where to put their capital, where it's or warehouse their capital or warehouse their cash, where it's going to be completely disconnected from the banking industry And what you see here on your screen, it'll be insulated, and you'll have full access and liquidity to your cash whenever you need it. And so that's the real mission and purpose of what we're doing with these training sessions. Okay? And so with that in mind, I just wanted to show you a couple of articles. If you noticed that Greece, Greece, obviously they voted to not be a part of the new deal in Europe, and so what that means is that they're probably going to get kicked out of the European Union and not be able to use the euro anymore as their currency. And think about this in terms of just the psychology of human events. If they're kicked out of the European Union, the very next day they have no debt. All of their debt is wiped clean. How many of you out there wish that you could wipe all of your debt clean today and just default and just wipe it out completely? Well, that's what the Greek citizens see. They don't really care much about supporting this debt load to the other countries in Europe who hold the debt, namely Germany. Germany is bearing the brunt of holding all of the debt on these other countries. It's not just Greece. It's really Greece, Spain, Portugal, France, Italy, and a few other ancillary countries, Ireland, a few ancillary countries in Europe that they're completely insolvent and they're about to go bankrupt, and Germany's left holding the bag. And so the net effect of that is that anybody that is holding savings in a bank right now, when they work this whole situation out, those savers will have to take a major haircut on their savings to the tune of close to 30% of what they have saved. So think about this. If you have savings in any form in the bank, or in our instance, we call it money market accounts. Money market accounts is same as cash. It's same as the banking institutions. If your money is in cash in those money market accounts or in the banking institution, when this happens in America, which it will, we think it's going to be sooner rather than later, you're not going to have access to that cash. And so the next logical question is, where do you put it? Where do you put your money? And so that's what we're going to be doing in the next call. The next week on Thursday, we're going to be going into where do you put your cash, or where do you warehouse your cash where it's safe, where it's guaranteed never to be lost, where it's never going to go down in value. It can only go up in value, where you have full liquidity and access and control of all of that money, not on a limited basis, and where you have full creditor protection, full lawsuit protection, and full judgment protection on that cash. And so we're really excited. We think that this is the perfect time in history to be doing what we're doing. And what I wanted to show everybody here is just basically a what we've got going on with the Strategic Wealth Network platform. And so with that in mind, let me share my screen again real quickly and bring you over there. This is the platform that we've created. It's called the Strategic Wealth Network, and it's basically broken down into 3 phases. The first phase is step 1, and it begins with what we're talking about today. Where do you warehouse your capital? How do you protect your own personal economy from what's happening globally? What is the most appropriate way to deal with your cash flow and your savings and all of your other investments, actually, because if you do have investments in the market, in the stock market or in the bond market, those are just paper derivatives, and they're no better off than paper dollars or euros or Japanese yen. It's the exact same principle. It's all just paper that is not actually backed by any real asset. And so we teach people where to store your capital, where it's safe and you can get access to it, and it's fully liquid, where you will get a good rate of return, better than you could get in a money market account or in the banking system. And then we show you how to generate or real income through various opportunities that we can introduce you to. And then third and last, step 3 and last, is how do we shore up our personal economy so that we can reduce wealth transfers through either taxes or other areas where we transfer our wealth either unknowingly or unwillingly. And so we have basic overviews and information that is very, very insightful, to say the least. But it all really starts with your own personal economy. You know, as much as we talk about the global economy and even the national economy, I really believe that people are getting sick and tired of hearing about the doom and gloom report. And they really just care about their own families and their own personal economies. And so what we've done is we've created this platform so that we can focus on your personal economy, or even your business economy. If you own a business, it's the same thing. We work based on financial principles and basic economic principles or rules. A principle is a rule no matter what. It's kind of like gravity. You know, you can argue against gravity, but if you jump off a building, you're still going to hit the ground, right? Well, the same is true with finances and money. It's based on financial principles or rules of finance that have more to do with economics than with speculation. And that's the key, is that traditional financial planning has always led us down the road of speculation, and they call it diversification, but it's still just speculation. What we try and teach people is, how do the economics affect your personal economy, and how can we actually create a personal economy that is economics based and is more efficient and just gives you more, you know? And so that's what we're doing here. And so these weekly training sessions, we want you to share this information with your friends and your family. So anybody can sign up for these weekly training sessions by clicking this button here and entering in their information, you know, whatever that looks like here in the form here. When they enter this information, they will be sent a fact finder. The fact finder report is the first step in really regaining control over your personal economy. And so that fact finder report is sent to you automatically through our system. And let me see here, see if I have a copy of it online here. Let me go home. Here it is. This is the quick start guide. So everybody has access to this. You can learn exactly how this process works step by step. Our process is very unique. We take people through a very unique process where we analyze where you are today, and we find out where you want to be in the future, and we just simply build a roadmap and guide you and coach you through that process so that you can always achieve whatever it is you want to achieve. And it's a very simple step-by-step process. And the first step is downloading this fact finder report, which just gives us a basic snapshot of your financial picture. Why is that important? Well, you know, like the old adage goes, if you don't know where you're going, then any road can get you there. And so this form here that you fill out and send back to us allows us to see what holes do you have currently in your personal economy that we can either plug or reduce, and how can we maximize the cash flow that's moving through your personal economy. And so when you sign up for this webinar, finder form, or this financial information form, if you fill this out and give this back to us, just email it back to us. We'll go through it with you and analyze your own personal economy free of charge, okay? Now, this analysis typically costs about $2,500. This is our consultation fee, $2,500. but we're willing to waive that for people because we think that this is mission critical at this point. Right now, we are going through changes in the global economy that are going to directly impact your personal economy very, very quickly. You know, everything is happening exponentially fast right now today. You know, it used to be that things were very local and very linear in scope. And what I mean by that is, you know, you used to know when something would happen in your hometown, everybody knew about it instantly. But how many people actually knew about Greece defaulting on their currency halfway around the world back in the 80s? You know, back in the 80s, in the olden days, we used to be able to track things linearly as well. We used to be able to forecast what would happen in the future based on a consistent growth rate of our savings or whatever it is we were trying to forecast. Well, the world today is very different. Everything is global in scope and everything is exponential, meaning when Greece defaults, we have, you know, communication devices like Twitter and Instagram and, you know, Facebook, where you instantly get that information. And because it's instant communication and instant information, people tend to react psychologically to that information. And what we call the herd mentality or that groupthink mentality is really where we're focused right now. So the psychology of these events, in my mind, is a lot more important than the numbers. It's the psychology of human behavior when things happen, when these cracks start to appear, that really sends the alarm, you know, makes the alarm bells ring in my ears. And so we're at that point right now. We've been talking about this for so long. You know, Tim, how long have we been discussing these issues, do you think?
Yeah, many years. I mean, you know, for you know, if you really go back, it's even 15 years ago when we started to see monetary policy driving up asset values, mainly in real estate. And then what we've seen is consecutive reflating or, you know, reinflating of asset bubbles, not just here in the U.S. but around the world. So what makes it challenging is predicting when things will unwind. And another thing that makes it difficult is we're facing two extreme risks. One is what you would maybe call deflation or the shrinking of the money supply, and then consequently the loss of value of many essets, while at the same time facing the risk of overprinting of money or inflation, which ultimately can lead to hyperinflation. And so with a world where there's those kind of extreme risks, you know, financially, that we're facing, it's difficult to know how to prepare and how to move forward. And that's really the challenge that we're facing together, you know, to work out and navigate through and have, you know, peace of mind and confidence that in either scenario things will be okay. And we do believe we have a model and a way to do that, to navigate through. And I would say many of our members have confidence that they've done the planning that needs to be done. And frankly, many out there have no idea even that the risks exist or what it would look like if it were ever to materialize. And here we are with major events happening in the world. It's the time is really now to get something in place and be ready. So that's really the call.
Yeah, I always say it this way, you know, to summarize what Tim just went through is, you know, everything that we need to buy is getting more expensive, and everything that we own as an asset is getting cheaper and cheaper. And it's a weird thing to think about psychologically, but that's what we're seeing right now. The stuff we need to live on, food, fuel, gas, you know, just insurance costs, education costs, everything is getting more and more expensive right now. But the assets we own are becoming less and less valuable. And so that's the real challenge, you know, is what's your game plan to fix that problem? And it starts with step one, and that step one is, where are you warehousing your capital? How are you protecting your own personal economy from these other events? How are you insulating from what's going on Wall Street and around the world? The Greek citizens, because they knew that these austerity measures were coming down the road, or these new rules of the game were going to be imposed on them, these new taxes were going to be imposed on them in the future, we saw a huge amount of euros being dumped into Bitcoin. And I don't know how many of you are familiar with Bitcoin. It's a digital currency that emerged last year, or a couple of years ago now. And for a while there, it was pretty exciting. People thought it might take over as a global currency. And then it had a huge drop off when people realized it was just really speculative, right? Well, we saw a huge spike in Bitcoin last week. And I was watching the financial news networks and the talking heads out there, and nobody could figure out why Bitcoin had risen so quickly in one day. And they tracked it back to Greece. And what's happening is the Greek citizens don't know what else to do, so they're dumping all of their money into Bitcoin because they don't know what else to do. They don't have another solution.
Yeah, or other digital currencies that like Bitcoin, which really are an answer to and a hedge against fiat currencies that are government controlled. And frankly, if Greece was not a part of the euro and they were still operating under the drachma, they would be printing their own money, and we would watch a slow evaporation of citizens' wealth. But instead, they can't print their own money because they don't control the printing press, and that's why they're in the situation they're in. And so they're looking at other ways to take the citizens' money, and through something called a bail-in. And there you are, as a citizen in Greece, wondering, where do I go? How do I move? Well, digital currencies are simply a way to move and kind of protect your wealth after the fact. It's just a challenging situation. So
we're pulled up an article today. It's dated 7/9, and hopefully y'all can see this. It says Greece enters its crack up boom phase when fridges become money. And the whole article is about how people are buying physical things, including refrigerators and electronics, because, again, they don't know where to put their money. They don't know what to buy. They don't know how to hedge or protect themselves against the devaluation of the euro. So they're buying refrigerators and they're buying electronic items just to hold the value of their wealth.
In Argentina, who's faced many rounds of this, by the way, over the last 20, 30 years, Argentina, the people there resorted to buying BMWs and Porsches and foreign expensive cars to basically protect their wealth. So there are ways, basically, the people that are in the know will have ways to make moves, but it starts with having liquidity that's under your control. And unfortunately, it's too late for a lot of the people in Greece right now. They have to let the governmental, the bureaucrats decide how to best solve the problem, and hope that doesn't mean giving them a massive haircut on their deposits, which, if Cyprus is any indicator, that's exactly what will happen.
Yeah, the prediction is that they're going to get 30 cents on the dollar, which is insane to me. That means that's a 70% loss of your savings immediately evaporated. 70% of your savings in the bank immediately evaporated. And so, to your point, Tim, I also caught this article. It was posted today on Zero Hedge. The Greek drachma makes a mysterious appearance hotel bill. And they actually have a copy of the hotel bill, and it's in Greek drachmas. It's priced in drachmas, not in euros. So the people in Greece are already taking action, with or without their government. Yeah. I firmly believe that Greece is going to become ungovernable very quickly, just because the people are taking over. But go ahead, Tim. What were you going to say?
No, that's it. We're basically looking at ways to help us, as a group in our community, be ready and be be confident in the planning that we can do in advance because we still have time to position ourselves for whatever the future might hold. And that's the positive message underlying what's seems to be pretty negative things going on in the world right now. There are always opportunities that go along with upheaval like this.
Yes. In fact, in the 1700s, there was a phrase that was coined by a French revolutionary, and he said, when there's blood on the streets, buy real estate. Now, does that mean that you should all run out and buy real estate today? No. But what he meant was, when things get really bad, that's when you want to buy the assets that are valuable, that will hold their value. And so we have solutions to that as well. And so if you're interested in learning more about that, the first step, again, is filling out that fact finder that you received, sending it back to us so that we can contact you and just go through it real quickly and analyze your own personal economy, and then really start piecing together a roadmap or a solution to really insulate your own personal economy and show you how to maximize it. And it's all based on, again, financial principles and rules of finance. Rules like compounding, the velocity of money principle, arbitrage. These are financial principles or rules that we follow that are true whether you have $1 or $1 million. It really doesn't matter. It's the same effect. Does that make sense to everybody?
Mm-hmm. Yeah, and really operating consistent with the rules of nature when it comes to money, because there are laws in nature like gravity and physical, the laws of physics that come into play and that we understand, but they also apply to money, and how we operate should be consistent with those principles, even when our government is not.
Yep. So I pulled up the national debt clock again, and the U.S. total debt here is, this is just since the year 2000. But what I wanted you to see here is that because we're 61 trillion in total debt, that's 131 or 133% of what we bring in. This U.S. GDP, gross domestic product, is $17.8 trillion. Okay, so think about this. We bring in 17.8 trillion, but we owe 61 trillion. That's 133% of what we bring in. Now, typically, in most circumstances, when you pass 70% debt to income ratio or debt to GDP, 70%, you become insolvent as a country. Why is it that we're at 133% and we're not insolvent already? The only reason is because we have the ability to print our own money. That's it. But again, like back to Tim's point, what happens when people lose full faith and confidence in the US dollar? How valuable will the dollar be?
Right.
What will you want to own at that point?
Sean, sorry to interrupt. If you look at the middle of that debt clock, it talks about U.S. total debt per citizen, and then total debt per family, and then savings per family. And I think that's really our point here is we are hyper leveraged, and yet on a personal economy basis, we don't need to be hyper leveraged. We really need to focus on what we can control, which is really hard work and savings, and then putting that savings to work in the most efficient way possible and have it under our control. And so there's an entire paradigm shift that we want our members to have regarding how they look at their savings and how they look at the way that money works. And so that's a whole nother subject, but there's the issue: 752,000 per family and 9,000 per family savings. It's really incredible.
Yeah. So ask yourself this question: how are you going to contribute your own portion of that debt, that $752,000? Where's that money going to come from? Because the government will come after it. And so if you don't, if you have it in savings, if you have it in a 401k, IRA, mutual fund, money market account, banking system, what do you think the government's going to do to collect that money? How do you insulate yourself from that?
Yeah, well, we know what's happened in other places in the world. In addition to what's happening in Greece now, pension plans have been confiscated in exchange for your retirement money in a 401k. You get a promise, an IOU, which we would know here in the U.S. as a treasury bond, and that's a promise from the government to get a secure retirement. And so they say, don't worry, we'll protect you. We'll give you this promise in exchange. We want all of your money in that pension plan. And so those are some of the ways that have been used in Argentina, in Eastern Europe, and in Germany throughout the decades. And it's no different here. We're facing those same kind of legislative moves by our trustee leaders in the government.
Yep. Absolutely. So went long today, but I wanted to kind of give you a preview of what we're going to go into next week, and it really has to do with your own personal economy. We believe in the personal economy. This graphic right here is a depiction of your personal economy. And we're going to be going into this in depth. We've got your income, how you earn income, and how that flow of income is lost or transferred in various ways. And we're going to show you, calculate the exact dollar amount of those wealth transfers, and then show you how to redirect that capital into other savings and other ways to protect that money and insulate it from what we see today. Okay, so that's what we're excited about getting into, and that'll be for next week's training. And so please sign up for that next week's training. You all should have received a link that allows you to just automatically register for every weekly session that we do. Okay. Does that make sense to everybody? Hopefully so. So with that in mind, I want to thank everybody for being on this phone call. If you have any questions, please reach out to us. We're willing to help you as much as we possibly can because, again, we believe this is mission critical. The red flags are going up. The cracks in the system are occurring right now as we speak. And because we live in exponential times, we believe that it's actually going to come to America much faster, sooner rather than later. So the time to act is now. All right. With that in mind, thank you so much for being on the call. And this call is being recorded, so you will get a link to the recording. And we encourage you to pass on that link to your friends and your family so that we can just get the word out as fast as we can. My mission and purpose is very simple. I want to help people. That's it. Our goal, our mission and purpose is to help as many people as we can before this next collapse happens. Okay? With that in mind, have a wonderful week, and we will talk to you next Thursday.